Hello students, welcome back. This is Dr. Mercado. I hope all of you are having a great week thus far. This is a lecture for Accounting 1329, Payroll and Business Tax Accounting. Now we are going to begin covering Chapter 6, which deals with analyzing and journalizing payroll. This is the last and final chapter that we're going to be covering. Now in this chapter, we are going to be learning how to journalize payroll. Okay, so far we've been working with a lot of calculations and we really haven't been doing much of the accounting, which is debits and credits kind of a thing, in this particular course. So this is a chapter that dives into the accounting aspects of accounting. So it's payroll accounting. So now we're going to introduce the accounting portion of it in this last and final chapter. Okay. So, in this chapter, we're going to learn the different procedures for recording the payroll in a payroll register, transferring the information from the payroll register to the employee's earnings records, recording these transactions in the company's books of original entry, and posting them to the proper ledger accounts. Okay. Now, most of these transactions nowadays are being done in a computerized manner, where you enter your journal entry and everything basically flows in the correct direction. There's not a lot of things that you have to do manually nowadays with all of these different softwares that we have, but it is still very important that we know how everything is done. We need to know the logistics of it, not just rely on a system to do it for us. Okay, so there's a lot of things that are going to be going on in this chapter. We are going to be applying the concept of debits and credits. Remember, debits must always equal credits. Okay, we're also going to look at various withholdings that can come out of the employee's pay and some issues that the employer must be aware of in making these deductions. Okay, so there's a lot of information. Make sure that you do read the chapter before you begin working on your assignments for the week. That way you are not lost. Okay, now I have selected a couple of problems that I'm going to go over with you. These problems are either going to be on your test or on your final exam. That is why I selected them and I am going over them with you. That way you are able to completely understand them and have a good foundation on these problems. Okay, now the first problem that I am going to be covering is problem 6-2A. Okay, let me go ahead and jump over. So, problem 6-2A says, Kellen O'Brien earned $730 this week. The deductions from her pay were as follows. Federal income tax, $66. FICA OASDI, $45.26. FICA HI, $10.59. State income tax, $36.50. State disability insurance, $8.61. Health insurance premium, $19.50. Credit unit contribution, $35, and the United Fund contribution, $5. Okay, it says O'Brien's employer just received a garnishment order for a credit card debt of $3,500 against her pay. Compute the following. We have to first compute O'Brien's disposable earnings and then the amount of her pay subject to the garnishment. Now, in your book, there's a lot of information. I just copied a piece of it that talks about garnishment of wages. So basically, garnishment refers to the legal or equitable procedure by which a portion of the wages of any person must be withheld for payment of a debt. Okay, so through the garnishment process, a creditor, with the aid of the courts, may require the employer to hold back a portion of the debtor's wages and pay that amount to the court or the creditor. Okay, so basically what they're saying here is, if you owe money to different entities, they have a legal right to request that money be taken out of your paycheck, being garnished, and sent to them. Okay, and if that does happen, then your employer is going to get a notification saying, okay, you need to garnish wages for so-and-so for whatever reason, and this is where you need to send us the money. Okay, it's not voluntary, it's required. So the HR department, the payroll department, is responsible to abide by those garnishment letters that are received. Okay, so the first thing that they're asking us to do is to calculate disposable earnings. What is disposable earnings? And this is the logistics of how I would recommend you tackle each of your problems. Okay, locate the information in the book that talks or deals with this particular item in mind. Like in this case, we're talking about garnishment. Well, I'm going to go back and I'm going to refresh my memory of what garnishment is. Then they're asking me to calculate disposable earnings. Well, what is disposable earnings? Okay, That way you are familiar with the information. Don't just try to wing it, guys. Locate the information on your ebook and apply that to what the problem is asking us to do. So, disposable earnings are the earnings remaining after withholding for federal and state income taxes, FICA taxes, state unemployment and disability taxes, and deductions required for state employees' retirement systems. Those are the only things that we must deduct for disposable earnings. Any other type of deduction, any voluntary deduction, that is not excluded from the disposable earnings amount, okay? So, step number 1, we're going to calculate O'Brien's disposable earnings, okay? I am going to begin with the pay for the week. This employee earned $730, okay? Then I'm going to have all of my deductions, okay? Now the problem or the definition for disposable earnings says it's basically we're going to deduct all of our taxes. That's what it basically says. So I'm going to deduct my federal income tax, and I'm going to put it in parentheses because these are deductions. Okay, let me go ahead and put these in like that. Okay, so these are deductions. I am going to subtract this from my paycheck. Okay, deductions. Okay, so federal income tax is going to be deducted. FICA, OASDI is going to be deducted of $45.26. FICA, HI is going to be deducted for $10.59. The state income tax, all of these taxes must be paid by the employee. These are going to be deducted. Okay. And then we have the state disability insurance. Okay, now look what it says. Earnings remaining after withholding federal and state income taxes, FICA taxes, state unemployment, and disability taxes. So we have state disability insurance here. So that needs to be deducted. Okay, and that is $8.61. Okay. And then the health insurance, the credit union contribution, and the United Fund contribution, those are not included in the list. Those are additional deductions that the employee decided to participate or contribute to. These are taxes that we have to pay. I as an employee don't get to choose if I want to pay federal income tax. I have to pay federal income tax, okay? But I as an employee can choose if I want to contribute to the United Fund. Okay, that's my option. So those 3 items at the end are not going to be excluded for the calculation of disposable earnings. The only thing you deduct for disposable earnings are these items listed right here. Okay, so now I can calculate my disposable earnings. Disposable earnings. Okay, so my disposable earnings are going to be the $730 minus all of those deductions right there. Okay, so my disposable earnings are $563.04. Okay, those are my disposable earnings. Okay, that is what I am going to use as the basis to determine how much am I going to garnish from this employee. Okay, so from that pay, I'm not going to deduct from the $730. No, I'm going to calculate my garnishment amount from my disposable earnings amount. Okay, so now I need to figure out how much am I going to garnish. Well, first of all, we have to figure out what kind of a garnishment order did we receive. In this case, we got a credit card debt garnishment. Okay, in your book, you're going to find an area that talks about garnishment. Okay, it says that the amount of disposable earnings that can be garnished to repay the debt is the lesser of 25% of disposable earnings for the week, or the amount which the disposable earnings for the week exceeds 30 times the federal minimum wage rate. Okay, now down here it tells you the percentage of how much it's going to be garnished. Okay, now this is a credit card debt. Creditor garnishments is 25% of disposable earnings. Okay, 25%. That's a pretty big chunk right there, guys. So make sure we pay those credit cards. Okay, 25%. Okay, child support, 50 to 60% of disposable earnings. okay? So make sure we don't go out there and have lots of kids, and you're going to be responsible to pay child support. 50 to 60%, that's where they cap it at, okay? Administrative wage garnishment is 15% and student loan garnishment is 15%, okay? So these are the main items for which wages are garnished, okay? These are the limits. So we're looking at the 25% because this is a creditor. This is a credit card company, okay? So what are we going to do? So I'm going to get my disposable earnings, which is 563.04, and then my garnishment percentage. This is for credit card. Okay, that was 25%. Okay, and I got that from the table right here. 25% of disposable earnings. Okay, so the pay subject to garnishment, I'm going to go ahead and I'm going to underline that. I'm going to get the 563.04 times my 25%. Okay, that is going to give me 140.76. So the amount of her pay subject to the garnishment is $140.76. Okay, so those are the two requirements. Okay, everything is in your book. Okay, all of this information that you need to solve the problem is in your book. We just need to read, locate the information that applies to the problem, read it, understand it, and then apply it to the specific scenario. Okay, so that is exercise 6-2A. If you have any questions, concerns, whatever the case might be, I am available here to help you, okay? Just make sure that you do include the problem number that you're working on, your attempted step-by-step solution, and your specific questions so I can provide guidance, okay? So that is basically it. I'll have additional lectures for you on later on so you can review some additional problems, and I hope you continue having a wonderful week. Thank you, guys.